All right, we're looking good here. Hey, Jeff Barnes here coming at you again. Angels, Exits, and Acquisitions podcast. You know, my little soapbox and rant and rave about certain things that are going on, and just kind of bring you the cold hard truth about some of the things that we're seeing in the world of private placements, private equity, investing, raising capital, you name it. This show is really meant for business owners, entrepreneurs, and investors who are looking for, the truth about what is actually happening in different companies. I work with a number of different companies and on the capital raising side, on the investing front with investors and so on. And we have some incredible opportunities for a number of different investors. But I got to tell you, for the last, 20 years that I've been in this space of financial services and investing and whatnot, an investor myself, things have changed, right? A ton. Things have changed so much since, again, the early 2000s when I got involved in this as, becoming a financial planner and essentially an insurance peddler. Hated that job, by the way. Nothing against anybody who sells insurance. We need it. It's absolutely necessary. But I got into financial services because I wanted to learn how to make money. I actually wanted to learn how to invest and how I could make money for me, right? Say that a few times fast. And I learned that it was nothing like that, right? Everything that I was doing was all about, oh, well, here's the rules, here's the regulations, here's what you got to do, here's what you can say, here's what you can't say, here's how you sell insurance, here's how you don't sell insurance, all that kind of crap. And I hated it. It was not for me. I am not a salesperson, by the way. The way I do sales is if you like it, great, do it. If you don't waste my time, right? Plain and simple. I'm so sick and tired of time wasters. And I'll talk about that on another episode about how you do this when it comes to capital raising if you don't like sales. There's a really unique way that I go about it that's, I think, a lot different than many other people. But I want to talk about investing today, and we see these incredible opportunities. I can't tell you all of what they are. I don't want to get in trouble with the SEC. Any three-letter agency. One of the best things I ever learned early on in my career was don't go to war with a three-letter agency with an unlimited budget to defeat you. Like, best advice I could have ever gotten. And I got to say, I don't ever want to violate those rules. Whether you like them or hate them, doesn't really matter. They can do pretty much what they want within the letter of the law, but we all know that changes from time to time. So I try to avoid that, which means I'm not going to try and sell you any sort of investment. I'm never here to give you investment advice. I'm not here to be your financial planner, your financial advisor. Always consult with, that person that you're paying a lot of money to advise you on legal matters and financial matters. That's not what this show is for, but I'm going to tell you certain shit that I see on a daily basis. And that is, what we call lazy assets, right? We want to tell people, get off your lazy assets, right? I learned this from my mentor, Laura Langmeyer, years and years ago. And she had this saying, just get off your lazy assets. And it's like, well, what does that even mean? And the premise is we all have assets in our lives, right? Most people don't have monetary assets. They have maybe intelligence, maybe they have a skill set, maybe they have something they can leverage to do better with in their lives. And they're just lazy about them, right? Like if you're a person who is actually really, really good at doing something, but you're lazy about going out there and trying to sell it to the world, and trying to get other people to pay you money to do that thing, you're lazy, right? You're useless, you're worthless, don't do that. Don't just talk about how great you are and at the end of your life talk about, oh man, if anybody would have ever just paid me for the knowledge in my head, then I would have been a millionaire. Yeah, they don't do that, right? They don't pay you for the knowledge in your head unless you do something about it to prove that you have the knowledge in your head so that they will pay you, right? That's the reason I do this show. It's not because, I love just ranting and raving about because, eventually people will come to me like, hey, Jeff, I saw you on this thing. I saw you on that thing. I'd love to work with you, right? One of my friends, David, he goes on Fox News, CNBC, all these different shows on a regular basis. And my other friend, Vince, owns a company and they have a show on the floor of the New York Stock Exchange. Do you think that any of us absolutely love getting up and talking about the same shit over and over again? No, we do it because it's how people find us. It's how people get to know us. And it's because it builds that credibility, that trust and rapport, so people can come and do business with us, right? That's why we do this thing. It's the reason I write my newsletters. I don't write them because I absolutely love writing. I write them because I want you to get to know me and trust me and believe in what I have to say. And I feel that knowledge inside your head that you don't share is worthless, right? You can feel really smart all day long, but is that really going to put money in your bank? Is it really going to help you live the lifestyle you want? Or is it just going to make you pissed off at the rest of the world because no one's paying you for what you know, right? So anyway, that's my rant about that. Lazy assets. A lot of people are very lazy about using their skills, using their talents, using their abilities to go out there and make money. And so they just complain about it. Well, that's not what I want to talk about. That's, go get a job, go work for somebody, go build a business. I don't care. But I'm talking about people who have financial assets, right? Something that you can actually put on a physical balance sheet somewhere. If you don't have your own balance sheet figured out, you should be doing that. You need to have your own balance sheet. You need to know, your balance sheet and your P&L, your personal financial statements. These are scorecards for your life. You should be doing these, okay? If you're not doing them, get to work. Go download a template. I don't care where. Start filling them out. They're really simple to keep track of, and it's how you keep score on your financial well-being. You've got to do this, okay? And if you have a balance sheet that says, oh, you're worth $1 million, but you look at your bank account, you're like, I only got like $75,000 in my bank account, or whatever the number is for you. But on paper, you look like you're worth $1 million net worth, not just assets, but whether it's because you own cars, you own land, you own a home, your business is worth something because you can show that it's actually worth something because it's making money, not like this fabricated bullshit. I had a lady the other day, oh my God, I was just blown away, told me she was a quintillionaire because she created her own token and she's minted 15 quintillion tokens. However many zeros that has behind it, I don't know. It's more than 12. It's probably like, I don't know, 18 zeros or some shit like that. It's ludicrous. Anyway, richest person in the world, but apparently needed my help to raise money for her to sell her tokens. That's not what I'm talking about. Not fabricated, fake nonsense that you put on a balance sheet to make yourself feel good and tell everybody else you're a millionaire, a billionaire, or a quintillionaire. I don't know. I've never heard of that before, but to each his own, right? So anyway, if you have a balance sheet and you say, okay, I've got a house, I've got a boat, I've got a car, I've got all this other stuff, and they're all paid off, and that's great. And on paper, it looks like I'm worth $1.5 million, but I only have $100,000 in my bank account, and my 401k is at $300,000, something like that. Well, guess what? You are sitting on lazy assets, okay? And what do I mean by that? You think about the equity in your home. Let's just say you own a home, and I'll use the crazy numbers we have out here on the West Coast. You own a home and it's worth $1 million, but you bought it 15 years ago and you paid $400,000 for that home. And this is a real true story because this was kind of what happened to me. And now you've paid it off. So you have maybe $200,000 that you still owe on that mortgage because of the scam way they do mortgage insurance where they're compounding daily, but you're only paying off once a month after all the interest is built up. Different topic for a different day. But let's just say that you owe $200,000 and your house is worth $1 million. Okay. You are paying the bank every single month on an interest rate that you got 15 years ago, 5% per month or per year, whatever that number is. And that asset is worth something, but you're doing absolutely nothing with it. So that's $800,000 worth of value that's sitting there doing nothing for you. Right? Aside from making you feel really good because you can say, oh, well, my house is almost paid off. And if everything went to hell in a handbasket, I could actually go sell my house and still be okay. Do you really want to? Is that the dumb way you want to live your life? Like, oh, I lost my job and I can't get unemployment, or I had this major medical bill that came up and it's going to put me into bankruptcy if I don't get this sorted out and taken care of. I better go sell my house because, well, geez, who really wants to live in the same place for the next 20 years anyway that you've built all these memories in? That's a stupid fucking thing to think about and a stupid way to think about it. So instead, what you need to do is you need to find a way to tap into the assets and the equity in your home and use that for better purposes. And I'm not talking about go out and buy a car, right? Don't go get a home equity line of credit just to go remodel your house because, oh, it's going to make my wife feel great because we have a prettier kitchen and now she can feel better about inviting people over. Dumb things to do, all right? When I was, I know Robert Kiyosaki, had a chance to meet with him, had a chance to sit down with him, and I told him flat out, his book changed my life. Rich Dad, Poor Dad, I read it back in 2003. Changed my life, put me on this entire path to understand the world of finance better than I already did, which back then was, well, jack shit, to be quite honest. So I started understanding the world of finance. And he says, rich people buy assets, poor people buy doodads, liabilities, okay? So we're going to say you have $800,000 in equity sitting in your home, and this $800,000 is not earning you any money every single month. You're not getting paid on this, right? It's just sitting there. It's making you feel good, feeling like all warm and fuzzy inside because of everything went to shit, then you could sell it. I want you to make money on that. Well, how do you do that? Well, geez, Jeff, I could, go get a line of credit, or you can refinance your home. Let's just say you're going to refinance at a 50% loan to value. I'm going to be dropping some knowledge bombs on you for people that don't understand, basic real estate math and how money works. All right, I'm going to refinance it. That means I'm going to go get a new first mortgage from a bank for $500,000. Okay, that means I'm at a 50% loan to value. The house is worth $1 million. It's been appraised at $1 million. I get a loan for $500,000. Okay, now that $500,000 loan, I'm going to do some math here. If you guys don't know how to use a financial calculator, you should learn. Very, very important. Let's just say I go ahead and get a $500,000 loan on this property. And with that, I'm going to be making, annual payments. We'll say the interest rate is 6%. Okay. And I'm going to say it's a 30-year note. And I'm going to pay it all off in 30 years. It's a long time, but bear with me. Okay. My payment is roughly $3,000 a month on that. Okay. So now I have $3,000 a month payment. And I have $500,000, but I had to pay off my first mortgage, right? So now I'll have 300 grand because 500,000 minus $200,000 is $300,000. So now I have $300,000 to invest. I'm not talking about investing in your kids' college education in the future. I don't care about that. They shouldn't go to college. It's a waste of time unless they go in for free for a scholarship and playing sports or some shit. Terrible waste of time. But now I have $300,000 to invest. Okay. So I need to cover a $3,000 a month payment. So how am I going to cover a $3,000 a month payment with $300,000 to invest? So let's just say I want to get $3,000 per month, to me, and I'm going to go ahead and say, okay, I'm not going to increase the value of this $300,000 investment. All right, so it's going to remain $300,000. What does my interest rate need to be? I need to be making roughly 12% per year on $300,000 to afford a $3,000 a month payment, right? That makes sense. 12% times 300 grand is $36,000. $36,000 divided by 12 is 3,000. So you need to take 300 grand and invest it and make 12% per year to be able to pay that mortgage. So now you're paying off the line of credit. You're paying off your house for free, essentially. And at the end of the day, you're still going to be able to grow that nest egg, right? Now, what if you can get something like 18%, right? So now I'm getting 18% per year. And now my payment is $4,433.50 per year, or per month, I'm sorry. So now instead of all of the money going towards my mortgage, I am actually putting more money into my pocket. Now everybody's going to say, well, Jeff, you can't make 18% per year consistently. Bullshit. I see it happen every single day. And I'm not talking like pie in the sky, go invest in a startup and hopefully that startup will grow and eventually I'll get paid. No. There are legitimate investments out there that are paying people 18% every single year consistently, no problem whatsoever. There's the private equity world. There's real estate financing. There's hard money lending. Like, again, I had a guy come to me yesterday and I told him I couldn't help him with raising money, but I really like this kid. All right. Kid, he's in his 20s. He went to some real estate conferences. He started learning about this stuff, learns about real estate investing, fixing and flipping and all this. And he started meeting all these different people that are doing fixes and flips. And he said, you know what? I don't really know how to do that. I don't really want to do that, but I understand numbers and I understand money. And I learned about this whole thing called hard money lending. Could I go get some private investors to put up the money and they would make their return and they would invest in these first deed of trust is what it's called when you invest in a property. And the fixer and flipper, the real estate investor, as we call them, would take the money, buy the house, fix it and flip it, and then they'd make the profit on the house. But the lender makes money because they're loaning it, say, a 50% loan to value. Again, loan to value ratio. How much is the money that's going out the door versus what is the value of the asset? Okay. And he came to me and said, hey, man, I'm just talking about raising $30,000 to $100,000 per fix and flip. And, I'll just take the points on that. That's fucking genius, right? It's a great way for somebody that understands finance, understands money, and is willing to put in the time and energy to learn how to raise capital because you have to do that and understand the securities regulations and all that, right? It's a great idea. Most people never even think about this, but he would make money on the points on the mortgage. So again, let's just say you're that person. You have $300,000 that you can pull out after you've paid off, the first mortgage on your house. Yes, you owe 500 grand on your house. Okay, I get that. Whatever. But now you have $300,000 of cash that you can invest in different things. And if you can invest that in a way where, let's just say you make a $100,000 loan to somebody and you charge them 4 points. Every single time you make that $100,000 loan, you're making an extra 4 grand, right? You're just building that into the loan. That's what they got to pay you back. You do this in such a way where you're protected, like this guy was doing, 50% loan to value. I'm not going to loan any more than that. So if you show me it's 50% loan to value, we get an appraisal on that. I get a first deed of trust. I do a $100,000 investment. You're going to owe me back $104,000 plus the interest, right? And let's just say you charge them 14, 15% per year. No one would pay that, Jeff. You're retarded. I'm not, I promise. And I see it happen every single day. It's called hard money lending. If you have an asset that is worth a certain amount of money, you can get a loan against that asset. And somebody said, hey, I'm going to give you 100 grand and you're going to give me back 120, right? And you have to do it within 12 months. Well, geez, that sounds usurious. Why would I do that? Well, because if you know what the hell you're doing, that $100,000 just bought you a house that you can go fix and flip and rehab, and maybe you can sell for $250. Okay, now I'm not advocating becoming a real estate flipper. I tried that. I hated it. It was not for me. I love construction, but I don't like having to do this and be stressed out about the government and the permits and all the bullshit you have to deal with that. I'm not suggesting you do this. I'm just giving you an example, all right? Use it however you will. So I buy a house, $100,000. I put another 20 grand into it. Now I'm 120 into it. Plus I still owe an extra 20 back on my loan that I got. So now I owe, 140 back. Let's just say all said and done, owe 140. Let's call it 150 to make it easy. But I know I can sell this property in less than 12 months for $250,000. Well, would you do that if you have the skill set and you had the ability to do that? Yeah, you would, right? I owe 150 grand, but I can sell it for 250, and now I have $100,000 in profit, less whatever the government's going to take. But that's a story for another day. You use 1031 exchanges and find a way to defer your taxes, put it into a trust, put into different strategies that you can use to defer or avoid the taxes altogether. Again, different story for a different day. But the fact is that is how you take a lazy asset and you turn it into something. So again, you as the person who just took out a $500,000 loan on your house, you now have $300,000 to invest. You find 3 different people that need $100,000 loans. You charge them 4 points. Plus they have to pay you interest every single month, right? So if you're charging them 18%, that is a little high, but not necessarily in certain areas in this day and age. But now they're paying you $1,800 per year, right? $18,000 per year for every $100,000 investment. $18,000 a year is $1,500 a month. You do that 3 times, that's $4,500 a month. Hey, follow me? I know I'm doing math fast here. And if you're watching this on 2x speed, I hope you have a super brain, right? Because I already talk fast. But here's the thing. If you do that, you are secured by the actual real estate, which is why you get an appraisal. You make sure it's a third-party arm's length transaction, meaning, the person that's getting the appraisal is not the brother of the guy you're loaning the money to. You can't do that shit. That's fraud, all right? And that's why we call it an arm's length transaction. They're away from us. They are doing this other person, this third-party objective company that's reputable is doing the appraisal. That way I know it's a real appraisal. Great. We're awesome. And now you're getting $1,500 a month from these real estate investors. So if you do that 3 times, that's $4,500 a month. Keep up. And on top of that, you also got an extra $4,000 in points for each loan. So that's an extra $12,000. Okay. So they're paying you the $1,500. Let's just math this all out. So you did that 3 times and it's a full 12 months. Okay. So first off, you made $12,000 in profit on the points. Points means the interest that you charge them that got tacked on immediately to the loan. And then let's just say they all paid you $1,500 a month for the entire year. That's $4,500 a month for 12 months. What, $54,000 a year? So you just made $54,000 plus the 4 or plus the 12. So $66,000. Okay. You made $66,000 on a $300,000 investment. Let's just do the math on that one right quick. 66,000 divided by $300,000, 22%. 22% annual return. Okay. All secured by a first deed of trust on a property. It allowed you to do this. Now, the big dogs do this, like the biggest companies in the world do this all day, every day on bigger projects, right? When you're working on tens of millions, hundreds of millions of dollars of projects, guess what? They do the exact same thing. The numbers are just, they add a few extra zeros. And they can do that because they have the kitty behind them that's full of cash that they can just dole out, right? This is how you put your money to work and you get off your lazy assets. You find a way to take the assets you have and turn it into something else that's going to pay you cash flow, appreciate in value, defer your taxes, avoid your taxes, whatever you got to do, and stop just sitting there parking it and praying in the market and hoping it's all going to work out, right? Does that work? Hell yeah, sometimes it works. I'm up like 200,000% on my Tesla stock that I bought back in 2009, 10, 11? I don't remember. Thank you, Elon. I really appreciate that. It was one of the very first early stage. It was an IPO. I was not accredited at the time. I had to invest in the IPO, but my stocks are up amazingly. It's awesome. It's great going in there and seeing that plus hundreds of thousands of percentage, right? It's cool. Whatever the number is. Don't quote me on that shit, but it's a lot. And I love doing that stuff. And people tell us all day long, oh, well, I can't do that. Why not? I see people doing it every day. Why can't you do it? And trust me, I have this conversation with people. We have investment funds are paying 24% per year. I don't believe it. I don't think it's real. Okay, well, continue to be stuck in your own fucking way and not do this thing. That's fine. If you want to be afraid of it, that's fine. But do yourself a favor and go educate yourself. Go start getting in the right rooms, getting around the people that are already doing it. I just showed you how to make 22% on a pretty standard transaction. That is nothing crazy. 18% may be a little bit high, but guess what? If the person who's getting the $100,000 loans knows they're going to make $100,000 in a year, roughly 100% in return on investment for them. Why wouldn't they do that? And there are people that'll do this all day long. They're all over the world. There are people that are doing this in business. You go and you invest in a business and you say, hey, here, like the Small Business Administration does SBA 7 loans, 7A loans all day long. They're a pain in the ass to work with. I hate working with the SBA. I have partners that, no, we're doing this because we're teaching other people how to do it. Great. That's fucking wonderful. I hate dealing with the Small Business Administration because it's not their money they're loaning out and it's their job on the line. So their job is to find any way possible to say no. Okay. I don't care what they tell you. Any way possible to say no. Why? Because if they make a bad loan, it's them. It's their job on the line. They did a bad thing. They should do it. But to their credit, they have the most strict underwriting guidelines of anything I've ever seen, which means they are going to check everything. And if he doesn't check the box, like literally they are not a growth mindset. These people that do this are not growth mindset, all right? They are literally like, hey, if it doesn't check the box, we don't move forward. I hate that. I absolutely hate that. But that's the way they are. And they are there for a reason. Well, guess what? You could take their exact same criteria, right? And you can get their checklist. It's available anywhere you go look. You can even ask a local business loan broker, hey, can you give me the list of everything you guys would need to do for me to go out there and get an SBA 7 loan, 7A loan? And they'll do it for you. There's SBA 504 loans, right? That include real estate, commercial real estate. There are underwriting guidelines that you can figure out. Now, am I saying go figure it all out? No, you don't have to. You can go to a broker. You can say, hey, listen here, Mr. Broker, I have $1 million that I want to put into SBA 7A packages, and they can help you with all that stuff. You can say, I want to do hard money lending. They can help you with that. Realize they're going to get the points, not you, if they do that, okay? Which is totally fine. They're using their skills and their expertise to make you more money. You should be paying them for that, right? It's the way it works. So again, you find a business. You find a business, that's in your neighborhood that you really like and you frequent. I don't care if it's a restaurant, if it's a bar, those can be helter-skelter a little bit, but find something you like. And if these people are like, you can network with people. I provide loans to businesses for growth capital, right? That's the key word, growth capital. You don't need to do acquisition financing. You can if you have enough money and you know what you're doing. That's totally fine. But growth capital, what does that mean? Well, they've already proven that they know how to run a business. And what do they need? They need to hire more people so they can grow their business. They need to open a second location. They need to do more advertising so they can get more people coming in. And they're already profitable. Wonderful. We're going to make a loan to you. We're going to charge you 12% per year plus 3% on the points up front. And here's what you have. And you're going to have 15 years to pay me back. And if you don't mind getting payments for 15 years, that's totally fine. If you only want the payments out there for 12 months, that's a different story, right? The point I'm trying to make here is that people sit on lazy assets all the time. They sit on money in the bank. They sit on, whether it's an IRA or a 401k that's barely moving, not doing anything. They sit on equity in their homes. They have equity in boats and cars and second homes, all this kind of crap. And they're cash poor, right? I know people that have artwork, millions and millions. I know people that have hundreds of millions of dollars of artwork, don't even have $50,000 in a bank account anymore. And why is that? It's because they don't know how to leverage their assets. And they're also not willing to do the work to leverage their assets. Like, I got to be really clear here. People that are going to loan you money on your assets are going to require things of you. You have to have certain parameters in place. You have to have deeds. You have to have titles. You have to have insurance. You have to have bonds. They will loan you the money, but it's going to be on their terms. Do what it takes to get the money, because if you know how to do this thing called financial arbitrage is what I'm talking about. You take the money from them, you're paying them a set percentage, and then you use that money to go invest in something else that's going to give you a higher percentage. That is called arbitrage. When you do this effectively, you are making money for free. You are taking an asset that's not paying you anything right now, and you are actually making money with that asset now. And you can get cash flow from that. You can take that money, you can park it into a fund that's generating, 12, 18% per year, and let it compound and grow, right? Like, again, going back to the guy that, I'll use my example. When I had my mortgage on my house, it was a $400,000 mortgage initially, and it was like $3,500 a month, right? So if I went out there and I refinanced it and I got another $500,000 loan, but the payment is now only $3,000 a month because the interest rates have changed and the way you structure the loan's better and the loan to value is better, so they're going to give you better terms, whatever the case might be, you may still be making the mortgage payment out of your existing employment, your existing salary. That's totally fine. You're used to that. Don't go blow the money on some stupid shit that you don't really need. Don't go buy another big screen TV. I know they're only like a couple $1,000 now, but still, you get the point. Don't go remodel your kitchen because you really want to fancy your kitchen. Invest the money into something. Go find an options trader, a bond trader that knows what the hell they're doing. Put the money with them and say, hey, go make me more money. And then take the profits from your investment to go buy your doodad, your stupid like your nicer kitchen. Now, don't get me wrong. I love my kitchen. I love cooking. I love being in the kitchen and making great stuff. But that's a different story, all right? You go and you get the profits from your investments to pay for this. You don't take your assets that you currently have and do that. And what's going to happen is you're going to get hooked on this, all right? When you start seeing your numbers going up and up and up, you're going to be one of those people that's like, no, we're not touching it. We're going to let it keep compounding and do it again and again and again, right? Because when you get hooked on good returns that are profitable, that are compounding, you don't want to do anything else, right? All of a sudden, it's kind of like free money. And that's what everybody wants, is they want this free money. So you got to figure out how to get off of your lazy assets and go start investing the right way. Take your money or take your assets that are doing absolutely nothing for you besides making you feel good and turn it into something that's paying you cash flow. So you can go out on the golf course, go to the country club, go wherever the you want, I don't care, and brag about it to your friends, right? Because at the end of the day, everybody's got an ego and they all love to talk about how great they're doing and how awesome things are in their life. It's silly, but that's what we all like to do. And hey, you can make your friends jealous. So get out there, go out and crush it. See ya.